Hi, today I want to talk to you about your health insurance premiums. And the question that I have or been asked is, can I deduct my health insurance when I'm a sole proprietor, I'm running a company, and I pay my own health insurance? Well, I want to take you to the IRS code 162, where it talks about special rules for health insurance costs of self-employed individual. And I'm gonna read this to you. Allowance of deduction. In the case of a taxpayer who is an employee within the means of Section 401c1, there should be allowed a deduction under this section, an amount equal to the amount paid during the taxable year for insurance which constitute medical care for the taxpayer's spouse, the taxpayer dependent, and any child as defined under Section 152F1 of the taxpayer who, as of the end of the taxable year, has not obtained the age of 27. Okay, so the IRS has I don't know where I got this from, but this is under IRS Gov for small business, and it says treating medical insurance premiums as wages. So we talked about the benefit of an S corp is to be able to put yourself on payroll, and instead of taking all your net pay from like a LLC that's being charged at ordinary income, this way you get to take a portion of that and run it through payroll. And as you run in some of your money that you want to take through payroll, you can also include in there the insurance premiums into your wages so that they're deductible to the company, and it comes out of your wages. So I just want to read a bit of this to you, because not everybody reads these codes, and I know they're boring. Nobody really wants to sit and read these pages and codes, but sometimes just reading it makes you understand it. So just listen to this little part, and I won't read much, but I just want enough for you to understand why having an S corp give you all these tax advantages. Okay, so this is treating medical insurance premium as wages. So health and accident insurance premiums paid on behalf of the greater of a 2% S Corp shareholder employee are deductible by the S Corp and reportable as wages on the shareholder employee Form W-2. So the best way to deduct your insurance is to run it through your payroll. It needs to show up on your W-2. You can't just say, oh, I'm going to put it on a line item and deduct my insurance premium. It needs to run through your W-2, because the way the software program is set up, once it's on that W-2, the company, yes, gets a deduction from it, and it becomes a above the line deduction, which we know, maybe you don't know, but if you can get a deduction above your adjusted gross income, it increases your taxes more than trying to get a credit or below the line deduction. Okay, so when you put this on your W-2, it's actually added to your wages, so you can put it in that wages. Is exempt from Social Security and Medicare or FICA taxes. That's not going to come out of this money. So it's going to show up on your W-2 in box 1. But box 3 and box 5, it's not going to show up in there because it's exempt. Okay? But if you want to deduct your health insurance premiums, being an S Corp, We run it through payroll. Payroll is important because we can set it up to where you do have reasonable comp that's being taxed for FICA, but you can run your insurance through there. You can also run the employee's portion to your 401k or your Roth IRA. You can do the same thing as a C corp for its employees. A S corp can do that for the shareholder or owner, whatever you want to call it, shareholder or owner. Whereas a LLC, you're not allowed to do payroll on the owner. They have to take owner's draw. They just write a check to themselves, pull it out of the company. They don't have to run that through payroll because a LLC is not a recognized entity by the federal government. It is by the state, but not the federal government. But if you set up a S corp or take a LLC and elect to act as an S corp, then you're able to set yourself up on payroll, and you're able to take some of that tax money or that profit that you made and have it taxed differently. So that's important to know. That's a tax strategy that we put in place for our high income clients that are going to make or net profit more than $50,000 a year. So if you fall into that bracket and you have not set yourself up on payroll and even talked about the different things that you can do with payroll, then give us a call, because we set up tax strategies for you during the year so that by the end of the year, we ain't got to fudge no numbers or try to stick something in there. It's all planned out during the year, so we make sure that you have this deduction in place for the end of the year. Let's not wait till April 15 to try to save on taxes. Start now. If you haven't done it all year, start now. And then we can get the jump on it for 2025. Again, this is Lovey with Perfect Balance Tactician. Let's put some magic back into your paying taxes.